Welcome to the Tutors of Life podcast, where we research life so you don't have to. Episode 221. This is your host, Shaun Tutor.
And this is Sam.
And this is Ryan.
This is a Tutor episode where we try to teach you something new.
Love it. All right, what do we got
You
going?
just have the stupidest grin on your
I'm
face.
so excited. All right, let me tell you guys something. We went down to the park today. Dan's having his appreciation event. I will say I think maybe the dumbest sport invented is frolfing.
Yeah. I used to be really good at it.
Wait, frolfing is the thing where you throw the stuff at the
disc golf and you throw it at the chains.
That might be relaxing. I don't know.
No, dude, it's
I used
actually
to love it.
It's like golf.
Yeah, but you get more pissed off.
Yeah, that's true. I mean,
Did you frolf?
No, I just watched people frolf, and I was like, "That's not my sport."
Yeah.
I think it's like hiking. Like you actually have something like you're walking around the woods usually, and you're just throwing stuff. And I don't know.
That's true. The people that were there, not a single person was in a polo.
No
one was wearing a polo. No one looked like they were golfing.
No.
Everybody had like long hair, beards.
It's a hippie sport.
Yeah, it's a hippie sport.
It's a very hippie sport.
Yep. It's the poor man's golf.
This makes sense now.
Yep.
I know some of those discs cost a lot of money now.
Yeah, they do.
I've been told. I don't know.
Yeah. I was always told I should join the women's league when I used to play, but never did.
Thank God.
Couldn't be married to a frolfer.
No, dude, not for a second.
Wow.
All right, what do we got today, babe? What do we got kicking off?
Subject 2.
And creative financing.
Creative financing, yep.
Love it. I was actually just talking to Jake, and he was saying how he's been watching a lot of like creative financing YouTubes and podcasts. And I was like, dude, when are we coming up Monday? And he's like, oh, I'm going to have to listen to it. Which will be good. All right, Ryan, what's new in your life?
Oh, man. Life-wise, I mean, real estate stuff like always. Have some deals going on. Stable living's growing and kind of chaotic like always, but I would say it's just normal stuff. I don't even know.
That's good.
Kids are growing up. That's fun.
Yeah.
But other than that, I don't know. Bachelor party this weekend.
Nice. That'd be fun.
For who?
Matt Munson.
Ah,
Yeah.
that makes sense.
That's cool. That's fun. Where are you guys going?
Some cabin that they have by Siren, and then actually
nice.
after Saturday I have Rachel Karen's wedding.
Oh, really?
So I have to drive all the way back for that.
Wow.
Ooh.
But so I'm gonna be hurting this weekend, but
That's cool. Lacrosse or Eau Claire?
I think it's lacrosse.
Damn, dude.
I just gotta go to the reception for that part, but
Yeah. Cool. Really cool. Sweet. All right. So, Ryan, you are the creative financing guru here in the Eau Claire area.
yeah.
So, what do you got for us with creative financing?
Okay. I would say for me at least, I know there's like a million different strategies, but the top two I use a lot, and then there's also subject to. So the big three for me are land contract, which is the really simple one, which I think we both used a couple times, or at least I've used a couple times, which I can give an example of each one. And then there's the seller's second mortgage, which is really just owner financing on a portion of the property. So usually you have bank financing, and then you have the seller just brings owner financing, or basically owner financing for a portion of it. And then there's also, there's assumable notes a little bit, which I've never done, and there's subject to, which basically means that you make the payment for the seller on their mortgage. Now, how you kind of run the whole deal, I think there's actually a couple different ways, but for the most part is you're going to probably correct me because you just researched, but you get the deed, and then something else stays with the owner for a while, and then basically once you pay the note off, it transfers completely, and then it goes public.
Correct. Yep. Yeah. So like subject to, it's neat. So people confuse assuming a mortgage with subject to.
Yeah.
They can. So assuming the mortgage, you can't. They have a clause called due on sale clause.
Yeah.
Banks started doing that in like the 70s and 80s when interest rates went to 20%.
Yeah.
And they realized how much money they were missing out on because people would just pass their deeds and their loans onto the next person. And I was reading a book. I ended up just getting rid of the book. It was from 1970. The guy wrote the book in 1990, and he talked about his real estate journey in the 70s and 80s. And I ended up just getting rid of the books that did not pertain to the world we are in today at all, because all he talked about was like everything he did was seller financing, assuming a mortgage, or subject to. That was the whole book was about that. And I was just like, this isn't real life anymore. In the realm of, so now due on clause is most common for any commercial. I've talked to multiple commercial lenders now, and every commercial lender I talk to says commercial loan due on sale.
Yeah.
Conventional, first-time home buyer, WIDA, and VA are assumable. And then, but where subject to comes into play is, doesn't matter if it's commercial, doesn't matter if it's conventional, VA, doesn't any of that. You can be subject to that mortgage, and so like just what Ryan said, you get the deed, which is essentially the title to the house, so you own the house.
But they don't record it.
They do not record it, and there's multiple documents, and this is where it gets tricky. There's multiple documents essentially giving you permission to make that payment for the owner. And there's also what I was also seeing is there's a type of insurance that an owner may ask you to supply, just so if you fault, it doesn't fuck up their credit.
Yeah.
Because that big things that can scare away someone to letting you pay their loan is, what if you don't pay the loan?
Right.
I'd say the big thing I learned from the Pace Morby, which is the main guy I'm sure you got a lot of your stuff from, is that you want to come off as more the educated person that's done it a million times versus, the low ball or the other. I mean, you really want to come off as that you know everything, because then they're like, okay, you have a reputable company, you're going to make my payment on my mortgage, and I don't have to actually be concerned about this.
Sure, yep.
So I think that's the big play he has, is that he can offer basically that you don't have to worry about those type of things.
That makes sense.
Yeah, keep going, I guess, Phyllis. Yeah.
Oh, yeah. So the beautiful thing about subject to is those deals, your big thing you're buying is the interest rate. Mm-hmm. And so right now we just got our most recent commercial rate. We got it quoted at two different places, two different lenders in town, 8.75%. So when you're talking about 8.75% in a 10-year pay down, you're not paying down much of the principal. You're mostly only paying interest. And then the next 10 years of that term is when you start paying down that principal. So by buying a house, by buying a low interest rate, like a 2.5, 2.75, 3% interest rate, you have so much debt pay down in 10 years comparable to a high interest rate that your spread after 10 years with appreciation and with your debt pay down, you're able to make a killer spread. Yeah. So even if you're only breaking even or just losing a slight bit of money by taking over somebody's mortgage at a higher loan amount, but with a low interest rate, you're buying that interest rate so that when you go to sell it in 10 years, your exit, you have this huge spread of profit that you made.
I think the biggest thing, too, is I think they said, 98 or 99% of people are under 4 or 5% interest right now. And so basically the biggest thing with Pace's biggest thing is those people are not going to sell if they're basically they can't even trade up in house with the payments that they have or sell out of their house. So
right.
The biggest thing that they're offering is that you can basically still get out of your house or be negative equity in a recession, and people like us can buy them because they're still at the rates that they were 3 years ago. So yep. I think now that's probably it's probably one of the best creative finance options now for single family for sure. because commercial, I mean, at some point in 3 or 4 years, it's gonna get ballooned anyways. But for a single family, you could probably grab 1 million of them, really.
Yes.
But I mean, I see on the MLS even there was actually a couple of notes that were assumable, and I think they were almost upside down on them. But the thing is, they know that they could offer a 3% interest rate because they still have that note, and now it's like, you pay the realtor and you basically get a free house. So
well, dude, and if you think about it in your realm, if you're looking at a $300,000 house that you can assume at a 3% interest rate, your mortgage is about $1,300 a month, $1,350 a month. Make it a fucking group home, dude.
Yeah. Yeah. No.
In that realm, and when you think about that way, like you could then make profit on it by having it as a group home or whatever. Where if you just went to rent that house out,
it's tough.
You'll probably break even, maybe lose $100 a month or whatever with savings.
Yeah.
But if you were to do like group home or something with it, and just accept that in 15 years you're gonna have to remodel it. But who cares?
Yeah.
Doesn't matter because
probably almost half paid off by that point or more.
It'll be over half paid off, and you'll have so much fucking equity it won't even matter.
Yep. No, I like subject too. I mean, I think it's something that we kind of have to dive. I mean, I would say like my main goal right now is to get as many properties as possible with the lowest amount of risk. So basically buying properties where it's always going to cash flow well in a bad market, but I can get into it for a low amount. So get as much as possible. So long term, it's going to pay off. I just need to make sure that it's not upside down. Because, right. I mean, even if you sub to a property and you can't rent it for your payment, still, I mean, some people can do it. And I think Pace Morby can, and that's why he can just eat everything.
Right.
But
he's got a neat thing, and he talks about it in his videos. He has a private money lender who wants an 8% return. So a very, very wealthy individual who's just looking to get an 8% return on their cash. They go directly to Pace, and Pace does a 5-year payback on the second, essentially. And so, like, any of the rehab that they need for it, all the closing costs, finder fees, etc., and then whatever money amount the individual wants down on top of the sell of their house, right? Mm-hmm. All that Pace gets from a private money lender, pays that private money over 5 years at an 8% interest rate, so he's got no money into a deal.
Yeah.
And
yeah, I mean, that kind of leads into the seller second, I think. I mean,
right.
So I would say like my biggest thing that's helped me at least grow so fast the last year and a half is not due to financials or cash flow from stable living. I mean, that's a large portion of it, but I would say the seller second has really helped a lot. I do think it is kind of a dangerous thing as well, and a lot of people don't recognize that. But, I mean, getting off-market properties that are bigger that appraise for $1 million more than you bought it for, or a property that is very plus, cash flow, even 100% financed, I would say like that is when the seller second is really valuable, and especially for people. Well, that's the hard part. Is I would say a second is good for people that also can handle risk and have good backing with income, because you don't want to go buy a $2 million building and then basically have it 100% financed and it balloons in 5 years and you can't figure it out. But right. I guess example. So I bought a 40 unit in Stanley a year ago. Mm-hmm. 90% bank financed with a $200K seller's second. So I literally got it for $0 down. Mm-hmm. And it appraised at $3 million and it cash flows well. But the downside with the second is that note, let's say on the second, balloons the same time that my bank financing does. Mm-hmm. Well, that deal, I don't foresee it being upside down.
Right.
But let's say it was, it was really close to $2 million, and in 5 years it balloons. I have to come up with $180,000 at that 5-year mark.
Right.
So you can grow really fast that way, but you also
could fail really fast.
You could get burned if you did too many of them.
Yep.
Or you did, borderline. Like a lot of deals now, people ask me like, okay, why don't you do a second on this deal or that deal? And I'm like, because that deal is maybe 5% lower than market value, and I don't know where it'll be in 5 years.
But when you're talking something that was undervalued by $800 to $1 million.
That's worth the risk, in my
Right.
opinion.
Yeah, because then what are the chances? What are the chances in 5 years that the value, it loses a third of its value? Pretty low.
That's about it. Yeah.
Yeah, it'd have to be an 08 situation. That's the only way.
But I mean, that is a thing. Like you could eat deals up like that a lot, because a lot of sellers too on the seller side, and why I think it's a really good offering is you can offer a little bit of a premium price potentially.
Yep.
Because you're getting it for $0 down, and the seller's getting 90% or 80% of all the money, and they're waiting on 10%. Where
Right.
a land contract, they're waiting on 100%, or exactly. So even me on a deal, let's say that I owned and was paid off, if I have to wait on 10% of my money for 3 or 5 or 7 years,
wouldn't matter.
Yeah, who really?
Yeah.
But a land contract, on the other hand,
yeah,
that's tough for a lot of people to take.
Yep. Yeah, it really is.
Did you guys define at all what any of these are?
Seller's subject to, maybe.
Yeah.
So a land contract is basically you make monthly payments until the contract is out.
So, yeah, a land contract, in layman's terms, the seller is the bank.
Mm-hmm. And the seller or the buyer can make up the terms. So, like the interest rate, the monthly payments, how long the contract's for.
Yep.
And with that, the deed stays in the seller's name, or does it transfer?
Transfers.
It does transfer.
So basically, you can foreclose on them like the bank.
Yeah. But yeah, if the buyer stops making payments, the seller can just take it back.
Seller gets property back. Yep.
I would say I know this isn't explaining land contract, but the coolest thing with a land contract is you create the terms with the seller. So like, $0 down or low money down, or I've actually done one where it was a 40-year note, so like it didn't cash flow. There was no real reason of owning this, but they didn't care about a 40-year note, so now I could get the payment so low that I still cash flowed and I got into the property.
Yep.
Yeah.
Another way I did it, I did a land contract for a flip. I did a 6-month land contract where
That's cool.
They wanted a price that I could not give them. And I said, I will do a 6-month contract where you will get that price you want in 6 months from now. And so then once I sold the property in 6 months, they got their amount they wanted. So that way I didn't have to make any payments while I had held that property. All I had to cover was the materials and labor. Materials, labor, we got the flip done, got it listed. So my holding costs were $0, and that allowed me to pay them an extra. I think they wanted like 15 more than I could pay.
And but the risk is they get a property that's getting remodeled back.
Mm-hmm.
Exactly, yep. That they could list on the market.
To be honest, those short land contracts might be a cool thing for rehabs, because it's like you could burr a property and the bank doesn't even know the price that you paid for it.
Mm-hmm.
So there's a property on the south side.
Okay, wait.
Sorry,
Let's finish these definitions quick.
Yeah, Sam, hold us down.
So then we got, you guys are just going off. Don't even define anything.
6 hours later.
Oh, Jesus. So then you got assumable. So the assumable, you take over the deed and the loan.
Yeah, that's correct. Yep, that's exactly right.
And then subject to is the seller still have the loan, but you get the deed.
Correct.
And you're just making the payments for the sellers.
Yep. And then seller second.
Oh, yeah.
Is you have the property, you have the mortgage, but you also have a short land contract with the seller.
Kind of. So you technically don't have a land contract. It's just like another mortgage.
Okay.
Yeah.
Well, yeah. Cause
another loan.
Yeah, they're the second on the...
So if
because the bank gets the loan.
Yep.
Or the bank gets the property if you fail.
And they're in first position.
Yeah.
And so then the second position for the callable loan is the seller.
Yes.
Fun.
The hard part, I've been told, is like some banks will make the seller actually sign something that, like, basically if you don't pay the seller, like, the bank has to agree, because they're going to take on that note, you know what I'm saying? So, like, the bank has to agree, because if you don't pay them but you pay the bank, they would have to, you know what I'm saying, take that note on, and the bank has to agree they could. So it is kind of a
interesting.
But I mean, I think the coolest thing with creative finance is like those are like 3 things, but like there's so many ways to mess with it.
Mm-hmm.
Yes.
And actually, some stuff. I mean, there's a deal right now that I'm working on that I don't think we're gonna get it, but there's like 10 fourplexes, right? And we were trying to do a land contract with them, and I actually should not try to land it because the down payment, they want 15-20% down on like a $4 million property. I'm like, I can't do this right now. But like what we were talking about doing is potentially buying one of the fourplexes with bank financing, and then he would land contract the rest. So you get into a $4 million deal with $80,000 down.
Yeah.
But they get their $500,000. So like there's just so many different.
That is smart.
Dude,
stuff.
Yeah, that's in that book I was reading. The guy pulled up to it was like a bunch of single family houses the guy owned. The guy pulled up to look at it, and the guy pulled up in his like Mustang, brand new Mustang, bought a brand new Mustang, the guy, and the dude's like, hey, I'm looking to sell these, whatever, I like need an out, and the guy was finding his pain point. Turns out the guy who had all these properties had like a broken down car, like was behind on payments and all this stuff. And the guy's like, hey, I'll make you a deal. I'll assume the loan. I'll make up the payments, and you can take my car home. You can have my car.
Yeah.
And the guy's just like, I can have your car? And the guy's like, yeah, dude, today. Like, we signed this. You can have my car. And the guy's like, done deal. And so the dude got like 9 properties for assuming a loan and like a $10,000 car.
Yeah.
And back in those terms, they were $10,000 back then. I'm like, damn, that's fucking.
Yeah, I feel like it's a little bit harder now, but
It's definitely harder.
you still can like just talking to sellers. You could get very creative with like how you get things, assume things.
I've noticed. What is it? The lower end sellers are actually 10 times more difficult to create a finance with because they want their money. Like they really need, like they generally need it. Where like the big sellers, or like maybe even mom or pops that are in the $1 to $2-3 million range, they're educated, so it's harder to get them on price. But to them, they're like, they don't really care about their money now because if they get a $1,000 payment on a land contract, they're like, I can live on $10,000. So like they're much more apt to create a finance. Or a seller second, they're like, yeah, like who would want to come up with $400,000 down on Stanley 40 unit?
Right.
Yeah, I also think
anybody. It's hard.
Yeah, experienced people too, like know, like about taxes, like
they don't like taxes.
Yeah, exactly. So I think that's why a lot of them like to try and do those creative things.
Well, that's the Black River Falls deal. I got there 20 minutes early, and I was chatting with him. And that was one of the reasons why he's not selling more stuff. He's only selling like a couple at a time.
Stuff.
Yeah. He said he will in a few years, but he's only selling a couple at a time because of taxes.
Well, and he said he actually has like, 3 or 4 land contracts right now? Even?
Yeah, he's got 4 land contracts. He's like
50 units.
Yeah.
I've been talking to him since we were...
Cool. Oh, really?
Yeah.
Yeah.
It just, I can't get, the only thing he wants to sell is that.
I know. He was telling me about 2 in Bloomer he's got, and I'm like, yeah, dude, those.
Nice.
I'm like, please. He's like, they're here. I'm like, I know, please.
Yeah, I got one down the road.
Whoever buys those, it's like, is that going to be your end?
It might be. That crossed my mind. That really crossed my mind.
I couldn't do it.
I don't know. Yeah, it ain't my
To be honest,
game.
I would say, so we are starting to buy shit all over the place outside of Eau Claire.
Yeah.
I don't know if I'd be worried about the distance, to be honest.
Yeah, sure, you're right.
I don't know. I'm going to be the test dummy for this shit. But we're buying 40 units in Colby. We send someone up there 1 day a month. So it's like, it's like that sucks, but it's like you just got to make sure that you're not the fucker doing it.
Right.
Like you can't do it. Like,
no.
I couldn't.
Those units might be, those are, like Colby to me, it's 70s, 80s apartments. Like those are 1900s apartments.
Yeah.
So a little bit
big
different.
Big difference.
Well, and that's what,
like distance, I mean.
He made it sound like once every 6 months he would go there pretty much and do any maintenance things.
He probably should be there a little more.
Oh, he said once every 3 to 4 months, him and the maintenance guy would go down for a day.
That I wouldn't be worried about that.
I don't know, but then walking around, you're just like, this is like a solid month's worth of work of just being.
There's catch up probably.
There's a lot of catch up.
And he already he evicted one guy, trying to evict some other people.
The slowest end tenants too. That's the other side.
Yeah, I don't think it would be that bad, except for the fact because I think a lot of those tenants are there for life, but in the off chance that they're not, it's going to be a lot of work to fix those up.
Well, you can't fix them up. You can't. That kind of unit you have to keep as D-class units, and you have to accept
Put
that.
some butter on it.
That's it. That's it. That's all you can do. You got to accept you're not getting rents over $600. You're never getting over $600.
You're also in Black River, so that's probably
yeah. And like, I mean, that's one thing that we've put on our vision and like talked about multiple times is like trying to get nicer, newer units. Yeah. So I'm not going to take a step backwards just because of the potential it could have.
We bought 3 side-by-sides, those side-by-sides in Black River.
Yeah.
Like that type of stuff. That's, I mean, yeah. Distance, I just mean in general, like, I wouldn't be scared of distance. Now, really junky stuff's a different reason.
Yeah,
I try to stay away from junky stuff unless the price is too good to be true. Which Black River is close, but it's like, it generally, like, I don't know. Like, it's like borderline. Like, what do you do?
Yeah.
Right. Yeah, I'm not afraid to buy decent stuff far away. I'm afraid to buy shit stuff far away.
That's true.
Yeah. Yeah.
Yeah, because we had a flip in Black River. We have a flip in Alma.
Yeah, and Black River.
Yeah, and they're quick.
I like Black River.
Yeah.
I like it.
Nice, man. I didn't know you had you did one.
Yeah, we did a flip in Black River.
That was the one with the creative financing.
Yeah.
With the...
Oh, yeah. That I do remember that. Yeah. Okay.
And then we got the Alma one right now. Yeah, moving forward, what I want to do is more creative financing on my flips. And I talked to AJ about that on a Southside deal. I was like, hey, dude, like, what I have to offer them is really low. And we're going to sit down and meet with the lady, and I'm going to be like, this is what I can offer you. This is why I can offer it to you. If you're willing to split the risk with me and not charge me holding costs for 6 months, I'm willing to do this with you, right? And we'll sell it together, right? And we'll split the profits, And so like maybe I'll only get 10% profit instead of 20, but for not having risk, for not having holding costs, anything like that, I am about that.
Rehab costs only.
Right. And that's it. And
you might get a lot more shots at it too, where like right now it's like, it's unless you agree on price, what do you...
Well, so yeah, like that, I know there's no way with what I can offer them, I'm going to get that one on South Side. There's another one on North Side I looked at close to here. Same thing with that. I'm like, I can't offer you what you guys need, but if we could do this together,
then they can see what it ends up.
Yeah.
Proof's in the pudding. If you do one or two, then two, you can be like, I literally split this with someone, and
yeah, that would be nice. That'd be really, and because the thing with that is, my company would be getting paid. Like, I would be getting paid for work. It'd be the same thing if I was doing customer work with, but then there's that
upside, baby.
That upside.
Yeah. Worst
case, we don't make money, and maybe I lose a little on like paying my guys or whatever. I don't get my profit on paying my guys, keep my guys busy, but that's worst case. So what else we got? How else do we get creative?
I don't know. There's a lot of ways to get creative. I don't know. I just like the low money down ones, because it's like you can't keep buying deals without that option, but at the same time, the more financed you go, the more chance there is that you don't refi out. So it's like, I would say too, like a lot with the seconds now, like I did a couple up front with a 5-year balloon, and now I'll be like, I'll do it, but I need a 15-year balloon. Like, so then it's like, there really is no risk at that point. But
right. One thing that, this isn't necessarily creative financing, but I liked what Pace was saying about it, is like at Wisconsin, so we got that duplex Fall Creek one, and that is 6.5% interest, because it's a 1 to 4 family. It's 6.5 interest, and so we got to do siding and roof on it, and just a couple of things inside. Not bad. Yeah. Like like you said, the inside's good. Inside was good. There's just a couple little things, maybe $2,000, and then the siding and roof need to be like
bad.
You need to be replaced.
Yeah.
One side of the house siding was in good shape. The other 3 was fucked. And then the roof, So anyways, the thing with it though, and what I was thinking, I actually had a gentleman reach out to me about cash, asking what I do with my cash. And I said, I put them in my deals. And he's like, what do I do with my cash? He's like, I'm considering putting my cash in a 9-month CD with RCU for 5.9% interest. And I said to him, I said,
that's crazy. That's
yeah,
5.9.
Bro, I said to him, I said, how about we get coffee in the next 2 weeks? I said, I will pay you at a minimum. I said, if you give me a 6-month contract, I'll pay you at a minimum 8%. And the guy's just like, let's get coffee. And so, because my thought is this. So that property, to get that, have you done anything with Wisconsin yet?
I've got stuff quoted from them. We might do the big one.
Okay, so to do a construction loan with them, you have to put 25% down of whatever the price is of the property plus the rehab. You got to put 75% of that total number down, or 25% of that total number down. And so, but it's for 6 months to a year, it's interest only payments.
That's nice.
And then at the 1 year mark, you can do a reappraisal and you can do a cash out for a secondary loan on it, right? So if interest rates are at 7%, you still keep your 75% at 6.5, and then you get your other however much amount out.
Yep.
And so my thought was, if I could get that gentleman that reached out to me to agree to a 1 year, if he could agree to for a 1 year contract with me, 10% interest, right? Hey, you thought about tying it up for 9 months at 5.9. Yep. Why don't you tie it up for 12 months at a year 10% interest?
You don't not to, yeah.
Right, and then we don't have to put any money into that deal, zero. And so, like, that's kind of what I've been thinking. Like when Pace said that, I was like, oh fuck. I can like bank finance and be creative with this with like a private money lender to give them a deal, because people love 8 to 10% interest.
So I feel like we've talked about doing that, or you did for like the longest time on flips. Like buy and hold, it's much more difficult to do stuff.
Oh
like that.
Yeah.
But like flips, it's like yeah.
And like even we had that guy come talk about like the IRAs.
Yeah.
How you can like use IRAs to buy deals and stuff like that. So like my IRA is not big, but at some point, whenever I quit my job, I mean, it would make sense to just transfer it just to keep making money out.
We can't manage that. That's the problem. And so my mom wanted to do that with us.
That would have worked or no?
No, she can't, because it's vertical. If it's so
Sam.
No, spouses, children, parents, grandparents cannot do it. Brothers and sisters can.
I could do it.
You could do it?
Yeah.
What I was thinking was, Brooke, if she's interested in something like that, absolutely she could fund the deals. She cannot manage them, but she can fund them.
Interesting.
So she would not be able to do any of the holds that we have, because she probably manages for us, but
she could fund a flip.
She could fund a flip.
Oh, okay.
Yep. So, dude, so much red tape with that, but
So you talked to him after? Yeah.
Yes, sir. Yep, I did.
Yeah, I was interested in doing it, but there's only one person I can think of, and that's Eva's mom, and I'm like, we've already pulled out of that a little bit, so.
Sure.
She bought the fourplex and that duplex a long time ago. So, I don't know, to me, like, real estate in general, like, the creative finance side, it's like, how many good deals can you find? I generally think, like, that's the most important piece. I mean, I definitely think you have to have reserves, and, like, that is the other part. Is, like, you can't handle more, like, you have to, I mean, at some point, you have enough money to handle a lot of deals, but, like, you always are playing a balancing act, I feel like.
The other thing, though, is, like, if you have a good deal,
yeah, you can make money.
Anybody will be your partner, or you can wholesale it, or what, like, if you have the deal,
you're the man. Yeah,
you're the man, dude. You can make the money any which way.
Yeah, what was that guy telling us? Like, he had like people wholesaling things for like $40,000 or some shit.
Which one?
The door knocker. He said like he had some guys wholesaling stuff for like stupid fees.
Yeah.
Jesus.
Yeah. It makes sense though. I mean,
I would find the money at that point if it was a good enough deal. You'd find it. I don't know where you'd find it, but you would.
Well, and I've said this. You and I talked about this a lot. Like, I pretty much told you, like, I don't even care what you charge me if it hits my numbers.
No.
Like, it doesn't, like, if you bought a house for $20,000 and you charged me $100 and my number was $110. Yeah. That's in the realm of cash is where it becomes an issue. But if it's not cash and you were willing to buy it and then sell it, that realm, like, it doesn't matter. it does not matter what I'm charged. If it hits my numbers, I'll buy it.
Yep.
That's it. Mm-hmm. So, there, you can be so much more creative with real estate than you can with an IRA.
Yeah.
With anything.
Anything.
Really.
I don't know what. Yeah.
Yeah.
Mm-hmm.
Cool. Anything else, gang?
No.
I mean, I don't know if this counts, but I mean, there's also the whole, partnerships, I would say, is somewhat creative financing, but that also comes with a lot of red tape and risk. Like, I mean, there's a lot of deals that I've also done where the person brings the money. I do all the management, or the other way around. Like, even right now, what is it, on the Marion building in Menominee, with Adam from Muscoria. Literally, we were just sitting next to AJ while he brought up that deal, and I'm like, yeah, I'm interested. Now we're partners on the deal, which is like, and he's bringing a lot more money than I am, but I'm basically operating the whole deal. So, like, there's different things where people, I feel like, can creatively get into, anything. But the hard part with, partnerships, as you know, I haven't had one blow up yet, but it's going to happen. And, 1 out of 10 is going to blow up. But
oh, for sure. Well, that's what causes a lot of the partnership route is like the best route you can go as long as you have a good exit plan or like an idea for exit, and that's why ours was successful.
Goals.
Yeah. And so I'm like timid with who I partner with now because I want to make sure like we have the same goals. So like we partnered with my mom on a couple, my brother on a bunch, but it's because like those are all for retirement. We all plan that for retirement. That's just no brainer. It's no issues. Boom. But yeah, if you're doing, depending on the deal, it's all down to goals. Like if you guys are in line with goals and you have an idea for exit, if someone changes their goals, then you're good.
That's the hard part is I think everyone, like all my partners, they always say like, yep, the goal is buy and hold forever. And it's like, well, like, when people start getting money at some point, like usually they stop wanting to grow or wanting to buy and hold. Yeah. So like that's the thing is like I think it is early to see like what happens with a lot of those. I think the nice thing is not all my eggs are in any of the baskets. So like I'm not very nervous. Like if they wanted to sell or whatever, I'd be like, okay, all right. Yeah. I'd be like kind of sad if it was at a bad moment. I'd be like, hey, let me buy you out.
Right.
But
absolutely.
Yeah.
That'd be the biggest thing, but I would say flipping too, it's probably a lot harder to partner. Like, how would you? There's no reason to partner.
No, dude.
Besides maybe a financial backer.
But even then, for the partner wise, dude, why partner when someone's willing to give me 10%? If someone's willing to give me their money for a 10% return,
maybe on like a 50-unit apartment building.
Oh, and something like that I'd consider
for
sure.
Like 50 units or something.
Yeah, if it was a big burr project.
But then at the same time, the bank will probably give you the money, so it's like.
Yeah, they will. A lot of this stuff. That's kind of how I look at like where I'm thinking about what Pace was saying and stuff about like using a private money lender because, dude, if you can get a big burr, I have turned away like multiple properties because of like my personal financing cash because I'm like, oh, like I don't have enough cash to do 3 flips and 2 burrs at a time. You know what I'm saying? So I'll just be like, yeah, whatever, or I'll pass on. But in that realm now, thinking about that, like I just have to hold out a year to refi them. And so if I just hold out a year to refi, pay off the...
Yeah, let me know when you get a private money lender. You need one with a lot of money, though.
Yeah, the one I was talking to, he's probably, 50, 75. So he's enough where he can do one or two.
Yeah, it'd be nice to have somebody that... that's the thing is I guarantee they're out there if you even just tried a little bit.
Yeah, I'm sure they are.
Actually, I know one that we know that I did that deal with.
Yep.
Yeah, I guarantee you would at least do up to that.
Right, yeah.
It'd be, after that, it might get different. But, you do it for 10, 12%, I'm sure.
Right.
But...
Yeah. And, in a realm like that, even if you could almost have like an exit clause too. Like if you find a deal and you need that money, you can pull back, but you have to pay me half the interest back or something.
Yeah.
I don't know, something to make.
That's the hard part is like, I feel like a lot of private money invest people on like the lower end of the spectrum. It's like if they find something they want to invest in, like that's why it's nerve wracking for them. Because even a 9-month note at RCU,
bro,
pretty sure you can pull out of that.
I'm sure.
You're gonna get screwed. But
I'm sure you have to pay all your money back.
Okay, explain something to me. So they're at 5.9% for 9 months.
Yeah.
They just quoted that deal for me at 6.7.
Yeah, I don't understand it.
Like, where are you making?
I don't know.
Money?
I don't think they're making anywhere near the spread they were making before. I don't understand it at all. But what I don't understand, this is what I don't understand, right? In 2021, okay, when interest rate at the Fed was zero, okay, they were charging 4.5%. Most banks were at 4.5%, so they were making a 4.5% spread, right? Then now it's at 5.25,
and they're at 6.7.
and they're at 6.7. I'm like,
yeah.
So you guys went from making 4.5% interest to now you're okay with making 1.2? How'd that happen? The fuck? Crazy,
forcing deals, I guess. Yeah, I don't know.
It is. It has to be. It's scary. But then you got the other banks that are at 8.75. Yeah. That it's like,
I was told like credit unions don't have to pay taxes or anything, so like they can offer lower rates.
That makes sense.
It's like why?
Yeah.
That was the thing. I mean, yeah, I guess like Sterling Bank, like I still think they're amazing to work with. You just text them, they help you, and they're like the best customer service around. But you know, at some point, like you have to have an advantage, and if everybody's at 20-25%, I mean, no one has an advantage anymore. It's literally who has the lowest rate, and like that's your only. Besides I mean, I would say the rehab loans that like certain banks can help you with things and make things easier. But other than that, it's just the rate. That's the only thing, and which kind of sucks.
Well,
to be honest.
and even then, I mean, you look at it, and if you can get someone to lend you that cash up front for the rehab or like that loan at the other place, dude, you're talking a 2.25% different in interest rates.
I would say one thing. I know Sterling doesn't do prepayment, and every bank I've been to does damn prepayment.
Absolutely.
So, I mean, that's... And I would also say, like, their closing costs are usually double anywhere else.
Oh, 100%. Yeah.
So,
yeah, there is not a better bank customer service, a better bank rehab, Burr construction loan than Sterling Bank. I have not found it. They are the best by far, hands down. But long-term hold...
Yeah, what do you do? Yeah.
Yeah, tough.
Lock it up with the lowest rate you can find.
Right. Yeah.
But
what else you got, Sam?
I got nothing.
You just chilling?
I'm just chilling.
Enjoying the talk?
Yeah, I mean, we knew this episode was not going to involve me.
All right. Okay.
Hey, you got the definitions, because otherwise you probably wouldn't have explained that.
People would still be like, what's creative? What are they talking about?
Yeah, 100%.
All right. Any last things, Ryan?
I don't even know. My life. I don't know. Yeah.
All right.
No. I guess got to do another creative finance deal this month or something now.
You are?
No, I mean, we have to now. We talked about it.
Pretty much have to.
Right?
Actually, no, honestly.
I really probably shouldn't, but.
Now that we just talked about that, I'm going to get coffee with that gentleman next week, and I'm going to see if he's willing to fund that deal for us.
I mean, might as well. Then you can do another one.
100%. Because we have a couple other in the pipeline that we were talking about this week. We're like, dude, where are we going to come up with all this money?
Well, on top of that, too, like, for you guys, it's like, you might as well just throw your cash into buy and holds then, and then just private money the other stuff. Like, why spend any of your own money on anything but buy and hold or stocks or whatever you want to invest in?
100%.
Like, it should not be in your flips.
Dude,
that's the last place.
The amount I have in flips right now, tied up in flips, is not good.
Yeah, it should be private money only.
Plus,
that's
really
a write-off.
Yeah, no, it is a write-off. It's very foolish for the amount we have in flips. Like, very, very dumb.
Mm-hmm.
Yeah.
So...
I mean, it makes sense now because everyone says private money for flips.
They do. And it makes...
imagine, you could have other shit getting paid off.
And it's a lot cleaner. It's so much cleaner.
Buy your Bitcoin back.
Well, I hate, dude.
All right. Might be coming.
No, I'm telling you. From now until middle of 2024, we will see the bottom of crypto for this cycle, and that's when we have to get in. I have, sitting on the sidelines, Chetty. I got Chetty waiting.
Yeah, I thought it was coming back a little bit, so my stock count doubled, like from 2 months ago, like doubled. It was almost coming back to where I was.
Yeah.
Lost 30% the last 2 weeks again.
100%.
And I'm like...
I'm still up, I think, just a point, like half a percentage for sure.
Something.
Dude.
But I was getting excited. I was like, finally, we're going to get back. And then it was like, nope. I'm like, at some point, this is just, I don't know.
Dude,
I'm all in on real estate.
All my other stocks actually have been going up. It's just my cryptos that have been going down.
Brian with Clear Value Tax and Accounting Services, I've sent you videos of his on YouTube. that motherfucker predicts crypto and stock market shit. So good. You know the lady who buys properties. She's always talking about like businesses. Creatively buying businesses with no money down. Do you know which lady I'm talking about?
Yeah.
She used to work with Brian, and she's like, there is nobody smarter than Brian in like the realm of predicting markets. And she's like, everybody else is out here predicting. He has it analytically figured out how to track markets. And she's like, he told me about shit from 2008, 2 years before it happened, and why it happened.
Yeah.
I'm like, bro. And so he's over here. He's like, he showed in his clips him predicting cryptos the last 3 cycles. So like, for like 8 years back, and he's just like, okay, or don't listen to me. And I'm just like, all right. That's when I sold all my shit.
Risk, yeah.
Yep, I sold all my shit.
Down.
So yeah, from now until middle of 2024, he predicts that there will be the bottom, and then
how bad is the bottom? Is my question.
It's supposed to be lower than the most recent bottom,
which was pretty horrible.
Which was pretty low. It's supposed to be a little bit lower than that.
Okay. Next topic for you guys, because I really wanted to learn about this, and Sam, you're gonna hate me, but TIF districts and then opportunity zones. Because I literally talked to someone today. I can't say who it was. But they're like picking buildings, and it could be good for flips too, to be honest. There's like certain buildings in Eau Claire and Menominee and all these areas that literally the government, the federal government, the state government, and the city will pay for it all. They'll literally, like, you want to rehab an old building downtown, they will pay you 60 to 70% of your rehab costs. They will cover all of it. But you have to do what they want, and you have to understand planning and paperwork. And I don't understand.
That sounds like it would be a really long process with the city of Eau Claire.
Oh, he literally said, he's just like, yeah, no one can figure this stuff out besides the smartest of the smart. So like, no one even tries to do it. And
well, they're terrible to work with, anyways.
Dude, honestly,
they need to do that with the federal government.
Just wait until you listen to tomorrow's podcast.
Bro, I just go working because I've been trying to work with zoning.
So they literally have companies now that are consultants that do like the consulting on all the how to do it for your rehab, and like they'll take like 15% of the entire property because they will literally get you. But usually I think it's for like it's more for like, you know, I don't even know, the Grand or like a big building downtown. Like,
bro, so what you're saying there, when we were in stable living and we were starting that company, I remember taking business law, and I'm like, I'm so glad I'm taking this because this is helping us like write this shit and understand that stuff. Dude, all the like contracts and shit we had now in real estate with all like the red tape, contracts, inspections, zonings, all that shit. Dude, I have never wanted to went to school to be a lawyer as bad as now, to really fully understand contract law and things like that. Because, dude, just like you said, the people that can figure that out,
they're just handing them money. Because no one even, he literally said, like, nobody even tries to really apply for it.
Yeah.
Besides the smartest of smart, because, like, 99% of people just can't even understand it. And I'm like, yeah, I've researched, like, a tad, and I'm like, yep, I'm too dumb. Like, and I'm just not that type of person, but.
Right. Yeah, dude. Damn, I should have been a lawyer. I probably need to be a little smarter.
I don't know. I think it's just a skill set, but yeah, I don't know. I'm not. That's definitely not me. But I know, like, big buildings, like the ones that are like the one that has the farmers market, the huge one.
Yeah.
Doesn't make sense. Doesn't at all. Well, it doesn't matter because they get it. I'm not partially paid for.
I was told they also got massive grants for the ones by Quick Trip and Little Caesars. Because that was those
opportunity zones.
Was opportunity zones.
Yeah.
And I heard they got a stupid portion of that paid for. Because we looked at buying a property right there, right in that opportunity zone years ago.
Your like first triplex is in that zone.
Yeah. It's in it a little too far, I think, for a while. But yeah, that lot. They built on that lot.
Yeah, they built on that lot. That's the lot we looked at buying.
Yeah, that sucks.
Yeah. Who'd thought?
And it was priced high, I remember still. Yeah. But yeah, no. I mean, they tear houses down just like.
Don't give a fuck.
Yeah.
we could have been fucking.
That makes sense, like how they get money. Like it to make sense to build something new.
Because it don't make sense to me.
I don't think the student ghetto, though, is an opportunity zone.
It's not.
And I know
the student housing.
Yeah.
I don't think it is.
But there is a company that just keeps buying the houses and tearing them down and building new.
But that doesn't matter though, because your rents are so inflated compared to everywhere else.
Yeah, that's
true. You hit your numbers.
That's location.
Yeah.
Location and cost, right? So your cost to build those buildings, when a company charges that out, they're charging out at $220 a square foot.
Dude. Keep going.
Oh,
sorry.
and they built them all because they stopped building them now. Actually.
Yeah, but when you build at cost, they're building them at $160 a square instead of $220.
So I met a guy yesterday, or two guys. It's a 2-man crew like you and Kyle that build duplexes for an investor. 1,500 or 1,400 square foot aside. They do everything, pour concrete to the whole 9 yards. Guess how much their labor is for a duplex, or how much they charge this investor? Just labor, no materials.
Is it like a lot?
30,000 square feet.
30,000 square feet.
3,000
square feet.
aside.
Well, you would think probably about $60 a square foot.
$50K.
That's it?
Yep, they get it done in 8 weeks.
What?
Yeah, they build one every 2 months in the summer.
Who are these gods?
Yeah, I'll tell you after. But
holy
I'm like,
Christ.
what do you mean? He's like, I literally, by me coming off and showing these properties, like, I might be pushing us back, like, and I might, like, yeah. But they're gods because they both make 60, 30K or whatever in 2 months. But yeah, they do everything.
Wow,
That's
dude.
cool.
And I'm like, how do you do that? Like, how do you literally, like, how is that even possible? It doesn't seem possible.
Efficiency. I mean, if you...
Dude,
that's all they do is they just build the same building over and over.
Yeah, $60 a
So it
square.
As bad as...
No, that's exactly what I thought it'd be. $60 a square.
How, like, materials cannot be...
No, they are.
150K? Man.
Oh, yeah.
I'm talking like 3-bed, 2-bath, nice ass side by side.
Yeah, so your materials are going to be roughly, because you got to think that's cost. So their materials.
That's what they charge him.
That's what they charge him. So materials is probably 100 to 120 a square.
So they're killing it.
They're killing it. That's
that
killing
investor's killing it.
Yeah.
It's like $100K duplex.
Yeah, no, that's phenomenal.
More for a brand new one now.
Right.
I mean, charge whatever you want.
Right. Damn.
I don't know.
Sick.
I just when you told me that, I was like, oh, it made me sick.
No.
Those guys, I could never
build. If you heard that, I'd be like, don't ever build ever again. Like, don't even look at it. Like I'm saying, you guys, it's not worth your time to.
No, you just hire them out.
Yeah.
Yeah.
Okay.
Yeah. All right.
Small town, but yeah.
There we go. Okay. Well, thank you for tuning in, Ryan. It was a lot of fun, and we'll check out opportunity zones and TIFs.
Sweet.
All right. Catch you on the next one, guys.
See ya.
Bye.